Crypto's market penetration tipping point. Crypto is expected to cross the 10% threshold of adoption in 2025, marking the transition from niche to mainstream, says Psalion's Alec Beckman. You're reading Crypto Long and Short, our weekly newsletter featuring insights, news, and analysis for the professional investor. Sign up here to get it in your inbox every Wednesday. The digital assets market has transformed from a niche experiment into a global force reshaping finance, commerce, and technology. In May 2025, the global crypto market is valued at $3.05 trillion, growing at a pace on par with the internet boom in the 90s. Historical adoption curves for technologies like the internet and smartphones demonstrate that 10% penetration often marks a tipping point after which growth accelerates exponentially due to network effects and mainstream acceptance. Digital assets are now on this trajectory driven by rising user adoption, institutional investment, and innovative use cases. After years of public uncertainty, a pivotal milestone may be achieved this year. Cryptocurrency user penetration can surpass the critical 10% threshold, estimated to reach 11.02% globally in 2025 by Statista, up from 7.41% in 2024. The chart below compares the early user adoption curves of cryptocurrency and the internet. It highlights that crypto is growing at a significantly faster rate than the internet did in its early years. With crypto expected to cross the 10% threshold of adoption in 2025, it is important to note that the 10% mark is not arbitrary. It's a well-documented tipping point in technology diffusion, rooted in Everett Rogers' diffusion of innovations theory. This model shows that adoption shifts from early adopters 13.5% to the early majority 34% at around 10 to 15% penetration, marking the transition from niche to mainstream. Crossing 10% market penetration triggers rapid growth as infrastructure, accessibility, and social acceptance align. Two very recent examples of this are the smartphone and the internet. For cryptocurrencies, surpassing 10% penetration in 2025 would signal a similar inflection point, with network effects amplifying adoption, more users increase liquidity, merchant acceptance, and developer activity, making crypto more practical for everyday transactions like payments and remittances. In the US, 28% of adults, approximately 65 million people, own cryptocurrencies in 2025, nearly doubling from 15% in 2021. Additionally, 14% of non-owners plan to enter the market this year, and 66% of current owners intend to buy more, reflecting significant momentum. Globally, 2 out of 3 American adults are familiar with digital assets, signaling a sharp departure from its earlier speculative reputation. These figures underscore the growing mainstream acceptance of digital assets, aligning with the post-10% adoption surge observed in other transformative technologies. Crypto's economic impact spans remittances, cross-border trade, and financial inclusion, particularly in Africa and Asia, where it empowers the unbanked. Several factors are propelling crypto past the 10% threshold. Institutional and business involvement is accelerating digital assets mainstream integration. Major financial players like BlackRock and Fidelity are going all in on crypto services and have launched crypto exchange-traded funds, ETFs, with 72 ETFs awaiting SEC approval in 2025. Businesses are adopting crypto payments to cut fees and reach global customers, particularly in retail and e-commerce. Examples include Burger King in Germany accepting Bitcoin since 2019 and PayPal's 2024 partnership with MoonPay for U.S. crypto purchases. Platforms like Coinbase Commerce and AAA, alongside partnerships like Ingenico and Crypto.com, enable merchants to accept crypto with local currency settlements, reducing volatility risks. DeFi activity has increased significantly in sub-Saharan Africa, Latin America, and Eastern Europe. In Eastern Europe, DeFi accounted for over 33% of total crypto received, with the region placing third globally in year-over-year DeFi growth. Despite its momentum, digital assets face hurdles. Still, the trajectory is promising. Bullish sentiment and crypto-friendly regulators coupled with ETF momentum and payment integrations underscore this trajectory. If innovation continues to balance out with trust, digital assets are likely to follow the internet and smartphone playbook and grow even faster. Alec Beckman is the VP of Growth for Psalion, an asset manager in the digital asset space where he focuses on capital raising and growth efforts. He is also co-founder and the president of Advantage Blockchain, a digital asset investment fund and research company. In addition to the growth of the business, he has done a lot of work in the RWA, DeFi, and stablecoin spaces and has onboarded hundreds of people to Web3. Alec holds a Bachelor of Arts in Economics from Penn State University.